The year was 1956. Nicolas Darvas, a young dancer from Hungary, found himself far from home performing in Toronto, Canada. He was a man of grace and rhythm, captivating audiences with his every move. His passion for dance was evident, and his performances were nothing short of mesmerizing. Instead of a typical cash payment, he received something unexpected: stock certificates. These pieces of paper, foreign and mysterious to him, were a far cry from the applause and cheers he was accustomed to. This unusual compensation marked the beginning of Darvas's foray into the world of investing, a journey that would see him amass a fortune in the stock market. The stock market, with its ups and downs, its risks and rewards, was a world away from the stage lights and dance floors he knew so well. Little did he know, this peculiar payment would ignite a passion for finance that would overshadow his dancing career. The allure of the stock market, with its promise of wealth and success, began to take root in his mind. Darvas, with limited knowledge of the stock market, initially treated the certificates as a curiosity rather than an investment. He would glance at them occasionally, wondering what they truly represented and if they held any real value. He tucked them away, more focused on his upcoming performances than on deciphering stock charts. The stage was his sanctuary, and the applause of the audience was his reward. However, fate, it seemed, had other plans for the dancer. The stock certificates, once an afterthought, began to occupy his thoughts more and more. The stock market, with its allure of quick riches and hidden opportunities, was about to draw Darvas into its intricate web. He started to read about the market, learning its language and its secrets. The more he learned, the more fascinated he became. The world of finance, with its complexities and challenges, was a dance of its own, and Darvas was ready to learn its steps. Weeks later, curiosity got the better of Darvas. He had been hearing whispers and rumors about the stock market, a world that seemed both mysterious and full of potential. The idea of making money without the physical exertion of dancing intrigued him. He decided to cash in his stock certificates, hoping to supplement his income from dancing. The process was unfamiliar, but he was determined to see it through. He imagined the possibilities, perhaps a little extra money for travel, or to invest in his dance career. To his surprise, the stocks had appreciated significantly. The numbers on the paper seemed almost unreal, a stark contrast to the modest expectations he had set for himself. It was as if he had stumbled upon a hidden treasure. He had stumbled upon his first stock market profit, a gain that sparked an exhilarating thrill within him. The feeling was unlike anything he had experienced on stage. It was a rush, a surge of adrenaline that made his heart race. This unexpected windfall ignited a fire in Darvas's imagination. He began to dream bigger, to see the stock market as a vast ocean of opportunities waiting to be explored. The potential for wealth seemed limitless. The stock market, he realized, held the potential for wealth far beyond what his dancing career could offer. He envisioned a future where he could achieve financial independence, where he could dance purely for the love of it, without worrying about money. Encouraged by his initial success, Darvas began to dabble more in the market. He started small, buying and selling stocks with caution, but with each transaction, his confidence grew. He was learning the ropes, understanding the nuances of the market. He subscribed to financial newspapers, devouring their contents with a newfound enthusiasm. Every article, every stock tip, was a piece of the puzzle. He spent hours poring over the pages, trying to decipher the secrets of successful trading. He frequented brokerage houses, absorbing the atmosphere of speculation and anticipation that permeated these financial hubs. The energy was palpable, a constant buzz of excitement and tension. It was a world that was starting to feel familiar. Each tick of the ticker tape, each fluctuation in stock prices fueled his growing fascination. He found himself checking stock prices obsessively, eager to see how his investments were performing. The market's volatility was both thrilling and nerve-wracking. The world of finance, once alien and intimidating, was quickly becoming Darvas's new stage. He was no longer just a dancer, he was an investor, a player in the grand game of the stock market, and with each passing day, he felt more confident, more in control of his financial destiny. Word of Darvas's early success in the stock market spread among his fellow dancers and acquaintances. Soon, he found himself bombarded with stock tips and guaranteed opportunities. Eager to replicate his initial gains, Darvas listened intently, often basing his investment decisions on these whispers and rumors. He was captivated by the allure of easy money and the excitement of the stock market's rapid pace. He rode the waves of these tips, experiencing both the elation of quick profits and the thrill of seeing his investments soar. Each successful tip felt like a validation of his newfound prowess in the stock market. But with the highs came the inevitable lows. The sting of sudden losses was a harsh reminder of the market's volatility. Each downturn was a blow to his confidence, making him question the reliability of the tips he had so eagerly followed. Darvas was like a ship sailing without a compass, tossed about by the unpredictable winds of market sentiment and speculation. He realized that relying solely on external advice, without a sound understanding of the companies he was investing in, was a precarious strategy. His portfolio became a patchwork of hastily made decisions, driven more by hearsay and hope than by careful analysis and strategy. The lack of a coherent plan left him vulnerable to the whims of the market, and his investments reflected this chaotic approach. Determined to regain control, Darvas began to educate himself on the principles of investing. He pored over books, attended seminars, and sought out the wisdom of seasoned investors. He learned the importance of thorough research and the value of a disciplined approach. Gradually, he started to develop his own strategies based on careful analysis and a deeper understanding of market trends. This shift in mindset marked the beginning of a more methodical and informed approach to investing. No longer swayed by the latest tips and rumors, Darvas's investments began to reflect his newfound knowledge and confidence. He was no longer just riding the waves of tips. He was charting his own course, guided by a clear and thoughtful strategy. As Darvas delved deeper into the world of trading, he found himself increasingly drawn to the allure of quick profits. He engaged in frequent trading, buying and selling stocks on short-term impulses, often based on little more than gut feeling and market chatter. The stock market for Darvas had transformed into a high-stakes casino, with each trade a gamble. The thrill of the win was intoxicating, but the agony of losses cut deep. Darvas's initial gains were quickly eroded by impulsive decisions and an undisciplined approach. He was riding an emotional roller coaster, soaring high on hopes and crashing down with each misstep. The lack of a clear strategy, he was beginning to realize, was a recipe for disaster in the unpredictable world of stock trading. Section 5. Seeking wisdom on expensive couches. Desperate to regain his footing, Darvas sought the guidance of financial advisors. He sat in plush offices, listening intently as these experts, with their starched suits and confident demeanors, offered their insights. He paid hefty fees for their advice, hoping their wisdom would illuminate the path to consistent profits. However, Darvas found himself disillusioned. The advisors, he realized, were often no more informed than he was. Their recommendations, while seemingly sophisticated, often resulted in losses. He began to question the value of such expensive advice, realizing that relying solely on others' opinions wouldn't lead him to the financial success he craved. Section 6. The education of a speculator. A year of relentless trading, marked by both exhilarating wins and crushing losses, had taken its toll on Darvas. He realized that his approach to the market was flawed, his decisions driven more by emotion than logic. The stock market, he recognized, was not a casino but a complex ecosystem, where knowledge and discipline were paramount. This realization marked a turning point in Darvas's journey. He decided to step back from the frenetic pace of trading and embark on a period of intense learning. He devoured books on finance, economics, and market analysis. He studied the history of successful investors, dissecting their strategies and gleaning valuable insights. Darvas was determined to transform himself from a gambler into a knowledgeable and disciplined investor. Section 7. Lessons etched in red ink. Darvas's early losses, though painful, proved to be invaluable lessons. They exposed the pitfalls of relying on tips, the dangers of emotional trading, and the importance of a well-defined strategy. Each loss, etched in red ink on his brokerage statements, served as a stark reminder of the unforgiving nature of the market. He learned that the stock market was not a get-rich-quick scheme, but a marathon that required patience, discipline, and a deep understanding of the forces at play. He recognized the importance of fundamental analysis, of evaluating a company's financial health and growth prospects before investing. The allure of quick profits, he now understood, often led to costly mistakes. Section 8. The birth of a plan. Armed with newfound knowledge and a burning desire to succeed, Darvas began to formulate his own investment strategy. He focused on identifying undervalued companies with strong growth potential. He developed a set of rules for entry and exit, aiming to minimize risk and maximize returns. Darvas's strategy was a far cry from his earlier haphazard approach. It was based on careful research, disciplined execution, and a long-term perspective. He was no longer swayed by market noise or driven by impulsive decisions. He had transformed himself from a gambler into a calculated investor, guided by logic and a clearly defined plan. Section 9. From Toronto, with lessons. Darvas's time in Toronto, though marked by early missteps, proved to be a crucible where his investment philosophy was forged. The lessons he learned, often through costly mistakes, laid the foundation for his future success. He left Toronto with a newfound understanding of the market and a burning desire to conquer it on his own terms. Little did he know that his journey was far from over. He would carry these hard-earned lessons with him as he navigated the treacherous waters of Wall Street, eventually amassing a fortune that would cement his legacy as one of the most successful investors of all time. But that, as they say, is a story for another chapter.